Okay, let's just dive right into this. $13.2 billion. And no, that's not an annual figure. That is the staggering, absolutely massive amount of money moved in India's pharma and healthcare sector in just one single quarter. Welcome to this explainer. Today, we're breaking down a monumental shift in global healthcare finance, and we're looking at exactly how Indian companies are quietly but very systematically rewriting the global pharmaceutical map.
We're going to look really closely at India's pharma surge. And you know, it's honestly a tale of two completely diverging trends. On one hand, we've got Indian companies aggressively buying up global assets at record-breaking speeds. But on the flip side, private equity, which are usually the heavy hitters in this space, are suddenly hitting the brakes. So I'm going to explain exactly why this is happening, what these numbers actually mean, and how we can wrap our heads around this complex market shift.
To keep our learning highly focused today, here's our agenda. First, record-breaking pharma deals. Second, the historic Sun Pharma bid. Third, hospital consolidation accelerates. Fourth, the private equity slowdown. And fifth, looking ahead to public markets.
All right, jumping right into Section 1, record-breaking pharma deals, where Q1 M&A activity peaks. Let's set the stage for why this June quarter was so historically significant.
35 mergers and acquisitions were executed in the June quarter alone. And that volume, it hits a massive four-quarter record peak. Now, to put that into perspective, think about the broader global landscape right now. High interest rates, tons of economic uncertainty, things that usually kill deal-making. Yet, hitting a four-quarter high here is a huge signal of sector strength. But the really fascinating part? India Inc. is rapidly stepping up its overseas expansion. This isn't just a domestic reshuffle. This is Indian pharma giants aggressively expanding their footprint across the globe.
So what exactly does that global footprint look like? Well, a staggering 96% of that total M&A value came from outbound transactions. Just a tiny 4% sliver was domestic or other transactions. That literally means the vast majority of that $13.2 billion was spent by Indian companies buying up assets entirely outside of India to break into strictly regulated international markets.
But why are they buying overseas right now? Well, Bhanu Prakash Kalmovs-J, a partner and healthcare industry leader at Grant Thornton Bharat, really hit the nail on the head. He notes that companies are increasingly pursuing acquisitions to strengthen specialty portfolios, expand global market access, and build differentiated capabilities, rather than going for scale alone. So they aren't just trying to get bigger for the sake of getting bigger, they're getting smarter. They're acquiring highly specialized, innovative capabilities that they simply didn't possess before.
Moving on to Section 2, the historic Sun Pharma bid, the largest pharma M&A. This is the specific mega deal that really acted as the flagship for this entire record-breaking surge.
To truly grasp the scale of this, we kind of have to look backward. Sun Pharma threw down a monumental $11.75 billion bid to acquire US-based Organon. That is historic. In fact, the only cross-sector acquisition in India Inc.'s history that was bigger than this was Tata Steel's $12 billion takeover of Chorus Group, and that was way back in 2007. That Tata deal completely redefined India's industrial power globally, and Sun Pharma's move right now carries that exact same gravity. For the pharmaceutical industry, it is the largest ever M&A move to date. Absolutely wild.
But you know, it wasn't just Sun Pharma making waves here. Remember that whole strategy of building differentiated capabilities we just talked about? Here is the proof in the data. Zydus Life Sciences dropped $166 million to acquire US-based Acertia Holdings. Why? Specifically to enter the market for pegfilgrastim, which is this highly vital cancer-supportive therapy used to drop infection risks during chemo. And on the domestic front, French drug maker Sanofi transferred 13 established anti-TB and anti-infective brands to Gujarat Themis Biosin for $183 million. These aren't random buys. These are highly specialized surgical portfolio moves.
All right, let's pivot a bit to Section 3. Hospital consolidation accelerates across domestic healthcare. Because while the pharma side is aggressively going global, the domestic infrastructure is transforming rapidly too. $255 million. That's the total value of 9 specific hospital deals recorded in just this one quarter. Now, sure, compared to an $11 billion pharma megabid, $255 million might seem a bit small. But what is absolutely crucial here is the velocity. That figure represents more than double the deal activity we saw in the previous quarter. The pace is ramping up incredibly fast.
And this growth is being driven by rapid consolidation across regional hospitals, fertility clinics, and specialty care platforms. The big players in the space are systematically buying up localized, specialized healthcare centers. It's basically a highly targeted roll-up strategy aimed at completely dominating regional healthcare delivery across India.
Okay, pulling up Section 4, the private equity slowdown as PE buyouts drop. This is where our tale of two trends really comes into sharp focus.
Because while corporate M&A was essentially going through the roof, private equity actually hit a massive speed bump. In the previous quarter, we saw 45 PE deals, but in the current June quarter, that volume plummeted by roughly 40%, dropping down to just 26 deals. Plus, the total value was noticeably muted at $444 million. That represents a 3% decline quarter-on-quarter. The PE buyouts just totally lost their momentum during this specific period.
Now, it wasn't a total standstill, and the deals that did manage to go through were heavy hitters. For example, Everstone Capital and Waymade Capital teamed up for a massive $270 million investment in Apothecon Pharmaceuticals and Naventa. And homegrown investor True North infused $50 million into Embio, a Mumbai-based active pharmaceutical ingredient or API manufacturer. So the key takeaway here is that while the overall volume dropped, the private equity funds that were actually deployed were laser-targeted toward essential manufacturing and pharmaceutical infrastructure.
Finally, let's transition into Section 5, looking ahead to public markets, where fundraising declines. We've seen corporate M&A explode and private equity tap the brakes, but how did the broader stock market actually react to all this action?
Well, the public markets were surprisingly quiet. D Street remained pretty silent, with fundraising activity declining by 58% in value. We only saw 2 IPOs worth $58 million and 2 qualified institutional placements, which, if you're not familiar, is just a process where a publicly listed company raises capital by issuing shares directly to big institutional investors instead of the general public. And those raised $161 million. Because public funds were so tight, companies basically had to lean heavily on their own internal cash generation to fund those massive global expansions we explored earlier.
But you know, things in finance never stay quiet for long. With Monopole Health's upcoming $1 billion IPO, you have to ask, is the public market freeze about to thaw? Market analysts are actually expecting the current trend to reverse in the next cycle, led by this massive Bengaluru-based hospital heavyweight alongside several smaller offerings. So will this spark the next wave of capital injection into Indian healthcare? It is an absolutely fascinating space to watch right now. Thank you so much for joining me for this explainer. I really hope this deep dive helped you grasp the massive shifts happening in the pharma sector right now. Keep learning and stay focused.